Coinbase cancels withdrawals for several key reasons, all designed to maintain security and compliance in the cryptocurrency space. The primary reasons include compliance reviews through anti-money laundering and know your customer checks, bank-related holds that can freeze transactions, and occasional technical issues. These cancellations serve an important purpose. They help prevent fraud, money laundering, and ensure compliance with regulatory requirements. Common triggers for cancellations include large withdrawal amounts, unusual transaction patterns that might suggest suspicious activity, and connections to high-risk regions. Additionally, your account verification level plays a crucial role in determining whether withdrawals succeed or get canceled. Compliance reviews on Coinbase involve AML and KYC checks to prevent money laundering and ensure customer identity verification. AML focuses on detecting suspicious transactions, while KYC verifies user identities through documentation and checks. Reviews trigger from rapid high-volume transfers or incomplete verification. To avoid them, ensure full Tier 3 verification and provide documentation when requested. These reviews are required by laws, including the U.S. Bank Secrecy Act and FATF international guidelines to combat financial crimes. Bank holds and freezes are key parts of Coinbase's withdrawal process, directly connected to banking integrations. Holds are temporary pauses that allow time for Coinbase to investigate potential issues, while freezes result in permanent cancellation of the withdrawal unless you successfully appeal. These holds and freezes often occur due to unverified funding sources, sanctions from the Office of Foreign Assets Control, or duplicate transactions that trigger security flags. To prevent these issues, make sure your bank supports cryptocurrency transactions, use reputable bank accounts, and enable two-factor authentication for added security. Keep in mind that some banks may block or delay cryptocurrency transactions based on their own internal policies. Technical issues and fraud mitigation are key factors in Coinbase withdrawal cancellations. Network congestion or platform errors can mimic cancellations, while advanced fraud detection sometimes leads to false positives. Network congestion or platform errors can appear as cancellations. During high traffic, withdrawals may fail due to server overload, requiring retries. Platform errors, like software bugs, can also interrupt transactions. To prevent issues, always check wallet addresses for accuracy before withdrawing. Use Coinbase's Convert feature instead of direct external transfers when possible, as this keeps funds within the platform. If you encounter issues, try restarting the app to refresh the connection. Clear the app cache to resolve potential data conflicts. Contact Coinbase support with transaction hashes for faster resolution. Coinbase employs AI-driven fraud detection to identify suspicious activities. While effective, this system can sometimes flag legitimate transactions as false positives, leading to cancellations. The benefits include regulatory compliance and minimized risk. Here are the steps to fix a canceled Coinbase withdrawal. First, check Coinbase's status page at status.coinbase.com for real-time updates on any system issues or outages that might affect withdrawals. Next, submit an appeal through the Coinbase app or by creating a support ticket on the website. Include all required documentation, such as proof of identity or transaction details, to support your case. Monitor your email for updates from Coinbase support. Be ready to respond quickly to any requests for more information or documentation. Finally, be patient, as appeals can take 5 to 10 business days to review and process. Avoid submitting multiple appeals for the same issue. The best way to avoid cancellations is to be proactive. Verify your identity early, link a compliant bank account, and monitor your account for alerts. Consider using major banks known to support crypto transactions. Educate yourself on Coinbase's withdrawal policies and stay informed about any regulatory changes that may affect your transactions. Future trends in crypto withdrawals point to significant changes driven by technology and regulation. Compliance automation is increasing through AI and machine learning, with platforms like Coinbase using these technologies to flag suspicious activity more accurately. This could reduce false positive cancellations by up to 30% in the next few years. as seen in the AI-powered scenario builder for enhanced compliance. Decentralized identity systems may lower cancellation rates by allowing users to reuse verified credentials across platforms, streamlining KYC processes and reducing the need for repeated checks. This data flow shows how DIDs can securely store and present identity information. Banks are increasingly integrating native crypto services, which could cut bank-related holds in half by 2027, according to industry forecasts. This convergence reduces friction in withdrawals as traditional banking meets cryptocurrency. However, regulatory tightening may result in more holds on large withdrawals, such as those over €10,000 under EU rules, as global crypto markets grow toward $10 trillion by 2030. Self-custody solutions provide an alternative to exchange withdrawals, giving users control over private keys, access to DeFi protocols, and the ability to trade a wider variety of coins without intermediary trust issues. Experts emphasize that compliance holds are essential for legitimacy in crypto. Statistics show that cancellation rates are around 5 to 7% globally, with a 60 to 70% success rate for appeals. Fraud-related cancellations are decreasing due to improved AI detection, but false positives still occur. U.S. users tend to face more holds than EU users due to differing regulatory frameworks.